The head of the Bank of Korea wasted little time to reassure nervous investors that the Fed's decision to start trimming its balance sheet will have a limited impact on South Korea's financial markets and the wider economy. With more on his response, here's our Ji-yeon.
Korea's top central banker Ju-yeol says the U.S. Federal Reserve's tapering plan is within the extent of the forecasted range, adding it should have a minimal impact on local financial markets. Regarding the direction of the Bank of Korea's key rate policy, he said inflation and the health of the domestic economy will guide future decisions. He also added that the bank is keeping a close eye on volatility in the local financial market, with growing geopolitical risks stemming from intensifying provocations from North Korea. Despite the reassurances from the BOK governor, the Fed's move could lead to an exodus of foreign capital, since it's likely to put upward pressure on market rates as major central banks normalize their fiscal policies. Back in 2005, there was a huge flight of foreign capital worth $17.4 billion over the space of 2 years after the U.S. raised interest rates by more than Korea. To prevent this happening again, the BOK could consider raising its own benchmark rate from the record low of 1.25%, which has been kept steady for more than a year. An increase in market rates would make it harder for households to repay their debt, which currently amounts to a staggering $1.2 trillion, and this could affect the already sluggish domestic consumption, which is holding back the recovery pace of the Korean economy. Ji-yeon, Arirang News.